Hi everyone, it's your daily 10-minute business and finance news wrap for this Monday, the 26th of July 2021. Later we'll take a look at what to expect from profit reporting season, but first to best and less. Its CEO is calling for a return of JobKeeper. Now it comes as the discount retailer had a successful debut on the share market. For more, I spoke with its CEO, Orrock. Rod, the IPO price, $2.16. You closed at $2.40 today on the first trading day. You must be happy?
Yeah, we're happy, but I think I don't spend my life. I taught myself not to spend my life looking at share prices. It's really about what we do each and every day to improve the value of this business, and we'll take a longer term view than just the one day.
How are the lockdowns affecting your operations and trading, I guess, compared to your prospectus forecasts?
Well, we would prefer not to have lockdowns, but they are what they are. They're unexpected. We've made appropriate adjustments to deal with the lockdowns appropriately. We still believe that based on the information at hand, that we'll continue to meet the forecast that we've provided for this half of the financial year.
You operate at that discount end of the market. Given the lockdowns, are you seeing a change right now in consumer buying habits? I mean, are there any signs of consumer stress?
I think confidence is always impacted by uncertainty. We're a business that sits at the value end of the marketplace, and in some cases we actually benefit from that uncertainty as a consequence of the value, prices and product that we bring to the market. We would obviously be preferring to operate in a marketplace with greater certainty and greater confidence.
The threat of extended lockdowns, particularly in Sydney, from an economic perspective, do you think there needs to be more support, more government support, and in what form?
Look, I think the government's done a very good job up till now, and by that I mean, now we've got a situation where there is a high degree of uncertainty rolling out as a consequence of what's occurring in Sydney. I think that there are sectors of the market that are under significant levels of pressure. That they need to be those areas of the market that need it the most should be supported appropriately. We are a business which is in good shape. However, it doesn't take long with the type of employee base that we have and the expenses that we run within our business for that to change. We see that we can weather it for a period of time, but if it was to extend for a period of time which doesn't have an end point, then that would be very concerning for us as well. But I do believe that there are many small, medium-sized businesses in sectors which have been completely decimated that do require ongoing support by the government.
And by ongoing support, does that mean reinstating JobKeeper?
I think that's a good step. Obviously, job security for thousands and thousands and thousands of people, I think, is essential. This is not something that has happened of their own fault. This is something that's been foisted onto them quite unexpectedly. This view that people should be prepared for these types of outcomes, I think, is not reality. If it starts there, then I think that's a positive outcome for the economy, and I think that would take significant pressure off a lot of people who are wondering how they're going to make ends meet.
Rod Orrock there, speaking on the first day of the listing of his company, Best and Less. Let's go now to the CommSec State of the States report, which ranks the nation. And thanks to population growth, along with its success in suppressing COVID, Tasmania is ranked at number 1 for the 6th quarter in a row. Despite the recent lockdowns, Victoria is second, buoyed by housing, finance and construction work, and New South Wales fifth as relative population growth limits productivity. Going forward, the unknown is how extended lockdowns will hit these economies. For more, Rebecca Stubbs spoke with CommSec's Chief Economist, Craig James.
It gets down to population growth. If you go back over time, go back 4 or 5 years, what we had is more people going down to Tasmania for holidays. And I think a lot of people liked what they saw, not just those from other states and territories, but from overseas. And as a result, population growth has been rising over time for Tasmania. Of course, that means greater demand for homes, greater demand for cars, as well as things like social and economic infrastructure, things like roads and bridges and hospitals and schools and the like. And Tasmania is still riding high on the back of past performances. Basically, what we're seeing is Tasmania on top for the 6th consecutive quarter.
We're now seeing talk of, for example, of a Sydney recession. If you kind of narrow your focus down to the capital city, what's your view on that? Do you think that's valid? Is that something that we could be looking at?
I think it's much too early to talk about recessions. Certainly, we've got states in lockdown. They're dealing with those sorts of challenges at the moment. But what we have is got significant government assistance, federal government and state government assistance, as well as in the background, the Reserve Bank is continuing to maintain very easy monetary settings. So that's continuing to support economic activity. If that wasn't there, then we'd be certainly very concerned about the current situation as well as the outlook.
Craig James there from CommSec. To the Australian share market now, which finished flat despite opening up at a record, the 207,394. The miners did well. For more, I spoke earlier with Elio D'Amato from Daylight Financial Group. Elio, the market opened at a record but then declined. What happened?
Well, we had the strong lead from the US, of course, prior to the weekend, and that obviously buoyed sentiment early on. However, when US futures opened, we did see a slight sell-off, and it's pretty significant given that it's a big week in earnings, particularly for US tech companies. And then you couple on top of that the issues we're facing here domestically with regards to extended lockdowns, and unfortunately a little bit of pessimism set in, though notwithstanding those recent moves, we're still at quite high levels.
Those lockdowns, we're seeing some talks of a possible recession in Sydney anyway. Some economists have told me while it may not be 2 consecutive quarters of negative growth, just the impact of these lockdowns make it feel like we're in a recession, right? So what's the market thinking? Recession or not, does it make a difference to shares?
Obviously, when consumers are feeling a bit pessimistic as well as businesses, they're inclined to invest less, spend less, and therefore that has an ongoing domino effect on the broader economy. Learned experts are saying that they expect a negative quarter in the September quarter. Of course, we're yet to receive June's numbers as of yet. They're expected in the start of September. Now, they will be key because obviously everyone expects them to be a slight rise. However, if there's a retraction in that, then technically we could be headed for that recession because it's odds on that the September quarter will in fact be negative. Most experts are saying, though, they expect the December quarter to be a sharp rebound as we do come out of lockdown, and that makes perfect sense given the low base that will be coming off. However, really does it matter from other than for the economist perspective? Most likely not. However, the feeling that the consumer and businesses face, that does matter because they're the ones that fuel our economic activity and, of course, the profits that our companies generate.
Speaking of profits, reporting season begins this week. I think the big one is Rio that really kicks it off. What are you looking out for in these updates?
Look, prior to the shutdowns here in Australia, I think everyone was feeling incredibly optimistic about what was likely to occur in reporting season. Of course, there's 2 parts to earnings season. One is the reported numbers, and many companies have been providing very strong quarterly updates in the lead up as they've been upgrading their own expectations, and us as analysts doing the same on the back of what's been incredibly strong demand, not just here domestically, of course, but more importantly overseas. What is obviously now the next elephant in the room is the outlook statement, and investors were obviously very much looking forward to seeing some very positive outlook statements, particularly as the broader world opens up after its own COVID problems. But of course now a lot of that is thrown into a bit of question, particularly with our troubles here in Australia. And we saw today, for example, GPT, a large property trust, has actually been one of the first to actually remove their prior earnings and distribution guidance that they'd previously set themselves for this year. Basically, again, that whilst things aren't bad and everyone expects relatively good dividend checks and income investors have been patiently waiting for those, this concern about what may happen may temper company statements as well as their behaviours, which could leave a few investors upset, even though they're acting in their best long-term interests, of course.
And finally, I think the corporate story of the day, or one of them anyway, BHP looking to proceed with its near $8 billion Canadian potash development. How significant is it?
Oh, very significant. There's a whole lot playing out here. I mean, there are reports circulating, of course, that BHP is looking to exit the oil space. It's almost a move towards a more sustainable BHP. And potash is obviously one of those commodities whereby it's used to enrich the soil and obviously help with agriculture and plantations, particularly in a drier climate. So we're talking about what could potentially be a 50-year mine here. So this is a very significant investment. The interesting thing, of course, is that they've gone about getting things like approval for ports and a few other things, yet the board have not actually formally signed off on the deal as of yet that they're going to start mining. But of course, there is very strong indications that BHP is committed to this space, and it does highlight their focus now beyond, more obsolete or soon to be obsolete fossil fuels and moving towards more commodities that are going to be driving global growth. And potash is definitely up there in terms of that.
Elio D'Amato there from Daylight Financial. That is SBS On The Money, the live stream for this Monday. Don't forget you can listen to this as a podcast on the SBS Radio app, Spotify and Apple Podcasts.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.